Good afternoon, everybody, and happy Friday. We are in downtown Miami. We are going to be streaming for about 1 hour tonight. We're going to be talking about the stock market volatility. We have an absolute explosion in the VIX, so the CBOE Volatility Index. S&P 500 down over 1%, NASDAQ as well as the Dow Jones Industrial Average. But if we look under the hood of this market, what we'll find is an extreme, as I'd like to call it, bear market in growth names. Hey, what's up, Ken Kramer? Good to see you. Hope you're well. Dante Rose is here. What's up, Dante? Hope you're having a good night. I see Otto is here. What's up, Otto? Ken Kramer says market crushed today. Absolutely. We're going to talk about it, Ken. We are going to talk about that today. Charlie Richardson says hi, Tom. Lena Sandoval says hello. What is up, Lena Sandoval? Hope you're well. Santa Monica Rodriguez, happy Friday. Solo 401, Ibrahim Azam, happy Friday, everybody. Jonathan Richards says hi, Tom. Hope you had a productive week. I did. I hope the same for you, Jonathan Richards. Hassan Terrell, Rob H. Marilyn Ringles says hello from Murray Hill. What's up, Marilyn? So we're going to be in downtown Miami for about an hour. Beautiful weather. It's probably like 75 degrees. It was 78 and sunny today here in downtown Miami, Southern Florida. Very beautiful. Faith is here, says hello. Beijing Charlie says typical sell-off, nothing to see here. Yeah, so Beijing Charlie, it's good to see you. I hope you had a great Friday. If we just look at the S&P 500, the Dow Jones Industrial Average, and the NASDAQ, you would really not think anything is too wrong with this market, right? But if we actually peel back the onion, and we've been talking about this for a while, and we look under the hood, about 60%, I believe that's the statistic there, don't quote me on it, but about 60% of the NASDAQ is below its 50-day moving average. So if we look at individual stocks, all the high flyer growth stocks, the software as a service stocks, mainly the ones that did the best during the COVID sell-off, you're seeing these stocks come down significantly. And a lot of these stocks are in severe bear markets. So even though if we look at the major indices, it may not seem that bad because the S&P 500, the NASDAQ, and the Dow Jones, they're only off about 7%, give and take, between the indices. So we're going to talk about why, and I'm going to give my opinions on what I think is next. Hey, Sunshine After Rain is here. What is up, Sunshine After Rain? Happy Friday, everybody. NYC Rich says, hey, what's up, bro? How are you? I'm doing very well. Beijing Charlie says, unless it's a situation similar to the one in March, April of 2020, it's nothing exciting, says Beijing Charlie. Interesting perspective on that. The Swan is here, says hi, Tom and all. Verse says, go to the art, Tom. Maybe we will. We'll have a walk around. Hassan Terrell says, how was your Thanksgiving? Hassan, my Thanksgiving was fantastic. I hope yours was pretty good. What about you, Hassan? Marty Lewis is here. What's up, Marty Lewis? Buy the book. Great Walk says, hi, guys. How's it going? Faith, good to see you. Hope everybody had a good week. And I hope everybody has some good plans for the weekend. Melee says, good evening, Tom. What's up, Melee? So Beijing Charlie, I also wanted to make a quick comment about the absolute carnage we've been seeing in a lot of these Chinese equities, right? So Alibaba down another almost 10% today. Right, a lot of these Chinese stocks are getting pummeled. And one of the reasons for that is because obviously we run the risk of delisting, right? So Didi is a Chinese stock, probably going to delist. But even more so than that, in my opinion, I think you're seeing a lot of tax loss selling. So usually the stocks that have been the underperformers for the year, they tend to sell off even faster into the end of the year, because portfolio managers are selling these names for tax write-offs. So we're seeing absolute carnage in some of these Chinese names, and these things are down big. The Swan, it's good to see you. The Swan is joining us from Ireland. Hope you're well. Arsenal Fan 13 says, hey Tom, looking forward to this walk. Thank you, Arsenal Fan. It may be a short one today, guys, maybe only about an hour. Hey, Alex says, good evening, Tom. What's up, Alex? Good to see you. Hope you're well, Alex. Lena Sandoval is here. By the Book says, hey Tom and everybody. What's up, By the Book? Alex, long time no see. Hope you're well. So tomorrow we may be in Wynwood. Hopefully during the day. I want to try to get a stream in during the day. There's going to be a lot of art to look at, a lot of cool stuff to experience. So we'll do that tomorrow, hopefully. If I can get all my work done on time. Ibrahim Azam says you had a good week at school. That's good. So we're going to cross the street here, and then we are going to go to the Brickell in downtown Miami. So we're going to pass all of these buildings and go to the Brickell. Beijing Charlie says, as a Yank, why would I care about companies that I'm not even allowed to own? Well, you are allowed to own them. So you're allowed to own these particular names, and a lot of funds had a lot of exposure, especially a big hedge fund that blew up this year called Archegos. Took massive amount of losses. Hey, Shop by Scott says, hey Tom, have you been to Flagler Street yet? I keep dropping out and missing the full journey. Flagler Street? I'm not sure. Where is that, Scott? Do you know? Hey, Carolina Tom says, covered call ETF for the NASDAQ 100 QYDL. Thanks, buddy. I'm not too familiar with it, Carolina Tom. But one of the things that is interesting about like the QQQ, right? So it's an ETF that tracks the performance of the NASDAQ 100. A lot of my friends are only indexed, right? So I have a lot of buddies who only invest all of their money in an ETF or an index fund that tracks the S&P 500 or the NASDAQ. So much construction going on here. And a lot of my friends aren't even noticing this stock market sell-off because the major big tech companies like Apple, Microsoft, and Alphabet, they're keeping the indices propped up. But if you look under the hood, there's some major damage, and a lot of these stocks, like these cybersecurity stocks that we talk about a lot of these have cut under their 50-day moving average and are down 30 to 50%. Alligators are further up north. British Gray says, good evening, Tom. How are you? I'm doing well, British Gray. Olivier says, hello from Brazil. Welcome everybody from Brazil. M Wall on the Run says, hi Tom, this area looks like downtown West Street in New York City. A little bit. Hey, Dino, New Jersey says, hi Tom, will November's disappointing jobs market prolong the sell-off? Yeah, so Dino, New Jersey makes a really good point. We just got the jobs numbers out, and it was probably one of the most abysmal jobs numbers we've ever gotten. It was about a 500,000 miss. So really egregious. But what I think, in my opinions, with this sell-off, and we talk about this a lot on the streams, all of these very high beta, I use the term high beta, high growth stocks that trade at premium valuations. So these companies may trade at 10 times sales, 20 times sales, 20 times earnings, 30 times earnings. You get the picture. What I think is happening with all of this talk of the Federal Reserve claiming they're going to raise interest rates, going to continue to taper, this reminds me of the taper tantrum a few years ago. So what I believe Wall Street is doing is they're re-rating all these companies. Right, they're re-rating. So all of these big high flyers, I mean, do you guys remember Zoom? ticker symbol ZM. That was the stock everybody kept talking about. Everybody kept talking about that stock during the coronavirus pandemic. But now that stock is about 72% off of its all-time record highs. So these multiples are coming down. Wall Street is re-rating these names. But anytime this happens, there's always room for opportunity. This is where we need to be paying attention to the market, because in these quality companies that are continuing to compound out their earnings at 25% plus annualized compounded out growth rate, we want to see these stocks start to form bases and then continue back up. So I have a newsletter coming out tomorrow. There's actually going to be two newsletters, two behind the street newsletters coming out this weekend. It's going to be a lot of stuff. I've been working on it, and it's going to have a lot of charts that I look at, a lot of software as a service multiple comparisons I look at. So be on the lookout for that tomorrow and Sunday. Hey, the Austin Tennis is here. It says, hey, Tom. Hope you and all the other skate bros are having a good night. Appreciate it, Austin Tennis. Happy Friday, my friend. We're here in downtown Miami. Techno Pink is here. Techno Pink is our pal from the Dominican Republic. What's up, Techno Pink? Beijing Charlie says, over-evaluation in a nutshell. Ibrahim Azam says, thank you for putting in effort to make the newsletter, Tom. No problem, Ibrahim. I think, what kind of car is this, everybody? Is this a Lamborghini or something else? I'm not a big car guy. Shop by Scott says, that's the street with the NFT art I was telling you about last night with the giant LED monolith display. We'll have to check it out. Flagler Street. I'm not sure where that is in relative to this, but we'll check it out. Jason Lynn, welcome to the stream. This is Northeast 11th Street in downtown Miami. So Shop by Scott says, so it's right here and to the right on our way to the Brickell. All right, so maybe we'll stop by tonight. But happy Friday, Scott. One of the things I noticed about Miami is everybody has extremely nice cars here. Almost everybody. Austin Tennis says, are you waiting for the valet to bring your Lambo too? Funny. Techno Pink says, can you comment about the news on Bank of America in the city? I didn't understand. Yes, so Techno Pink. So there was news that came out on Wall Street. So the major investment bank, I just want to make sure, is the camera in focus? Just let me know. So today there was a lot of news that came out. Some of my buddies who actually work at Bank of America in New York City, a lot of the higher ups, so the managing directors, the VPs, are actually sending out notices or emails to some of the mid-level and lower-level employees to tell them to actually dress down and don't wear nice clothes to work because of the big crime surge in New York City. So I thought it was kind of crazy, and I believe the news leaked out to the New York Post, and the New York Post actually put out an article about it. So a lot of the Wall Street firms, if you work in investment banking, if you work in management consulting for like KPMG, Deloitte, Ernst & Young, a lot of these companies right now in New York City are actually telling their employees, don't come to work in nice clothes. Which is quite bizarre. It's really telling for the times we're in, because there's been an extreme crime surge in New York City. Carol Williams is here, says, good night. I am watching from the Caribbean island of Antigua and Barbuda. Very cool. Well, welcome. I see Maya here, says, Tom, hope you're well. What's up, Maya? I see Daryl, says, good evening from Chicago, Illinois. What is up, Daryl? Happy Friday. Jonathan Richards says, Tom, could you explain the cause and effect of the Santa Claus rally if you did it already and I missed it on the stream? Yeah, so Jonathan, usually the terminology on the street is anytime the major equity indices or stocks rally into the end of the year, it's called a Santa Claus rally. And one of the reasons that sparks this is underperforming hedge fund managers and underperforming mutual funds. They're performance chasing into the end of the year. So let's say you run a mutual fund on Wall Street and you're benchmarked against the S&P 500. And in that year, the S&P 500 has so far returned, let's say 20%. And your mutual fund has only returned 15% so far. Well, that means you're underperforming your benchmark index. And fund managers don't like that, because a lot of the times when a mutual fund underperforms their benchmark, what they have is capital outflows of the fund. And one of the main ways mutual fund managers make money is on management fees on the assets under management, or AUM. So oftentimes what these hedge funds and mutual fund managers will do is they'll bid up a lot of these stocks into the end of the year to juice their performance. And this is what really creates that Santa Claus rally, mainly due to performance chasing. And since it's right at the end of the year, is right around Christmas time, that's why they call it the Santa Claus rally. Techno Pink says, wow, that is bizarre. We have to dress great at our job as part of being professional. Yeah, so it's a little strange, right? One of my buddies who works at Bank of America told me, yeah, the notion that's going around the company is that managing directors and VPs are not telling the employees to dress in a poor way, but they're just saying, keep a low profile, don't wear anything that has the Bank of America logo on it. Keep a low profile, because there is a big crime surge in New York, which we'll talk more about a little bit later in the stream. But they're definitely telling their employees to dress down. Sunshine After Rain says, beautiful view, Tom. Hope you're well, Sunshine After Rain. Hey, I see Bezita Lopez here. Team Inc. says, that's bad in New York City. Wow. Maya says, yeah, my ex-boyfriend stopped wearing his Rolex. Well, one of the things that I think really created this situation is during the pandemic, and I talk about this ad nauseum on the stream, I really believe the pandemic has accelerated the wealth gap in this country. Because if we think about who this pandemic really hurt, it only hurt working class people. You were told you have to stay home, you can't earn an income, and you can't put food on your table to feed your kids. But if you're a high paid executive at a tech company, or you have, a master's degree, a college degree, and you work at a major tech company or in finance at a major investment bank, you don't really need to show up to work. You have the luxury of working remote. So all of those people during the pandemic, if anything, they've increased their incomes and increased their net worth off the back of a massive stock market rally. But the working class people got hurt the most. People who are working in services, you have to stay home, you can't make an income. These are the people who don't own assets. So what I think is it's perpetuated the wealth gap and the wealth divide in our country. And that's why you're seeing a crime spike. I don't think it's rocket science, and I think the majority of that is perpetuated by the Federal Reserve. Are many Chinese companies in New York City? Yeah, there's a couple. There's actually the Bank of China right across the street from Bryant Park. So here we are at the FTX Arena. Ibrahim Azam says, I think people who work in tech were fine, but others were hurt badly. I agree with you. Andrew Lee says, yup, totally agree. And as someone who works in tech, and who's also, during my college years worked in services, I can totally understand. But what I think happens is a lot of Americans who are making good incomes and have the luxury of working from home, they don't really understand what it's like to, have to wake up and actually physically go to work every day. And during a global pandemic, if your government is telling you, no, you can't go and make a living, well, it creates a crazy disparity in wealth. It's really, really crazy. Roz999 says, let's be serious. De Blasio plays a role in the New York City crime spike too. I think he's probably one of the largest factors in my opinion. I think you're right. Roz999. But we do now have a new mayor of New York City, Eric Adams. So hopefully he'll change things. I'm optimistic about it. Edson says, hey Tom, what's up bro? What's up Edson? Good to see you. TR61 says, hello Tom. D Wood says, so the crime spree is revenge. I don't think it's revenge as much as it is frustration, right? When you have, when you've hollowed out the middle class, and think about it, think about it like this. And one of my good buddies was explaining it to me today. And it really made sense to me. You have all of these politicians, right, in Congress, all the senators that were making their $175,000 salaries during the pandemic, getting to sit home, but they tell you have to sit in your house, you can't earn an income, you can't go to work, you can't provide for your family, all while congressmen and senators still have their gigantic salaries, but they're forcing everybody else to lock down. Now, you don't have to agree. Maybe that was the right thing, right? Maybe that was the right thing to lock down. I don't know. That's not the point. But the point is, it's not fair to lock down the majority of the people, especially since the majority of the people that were hurt by the lockdowns were people that weren't making as much as everybody that benefited from them. But that's my 2 cents. Dino, New Jersey says, Tom, the crime surge in New York and California is not happening in Florida or Texas. It can't be blamed all on the pandemic. Yeah, Dino, New Jersey, I think you make a lot of good points. I think you're making some good points. I don't think it's all the pandemic, but I think potentially a good part of it is the pandemic or the extension of the pandemic by the elitist class. I see Ron here, says, hey Tom, hello and welcome to the weekend. Thank you, Ron, appreciate it. The Swan says, de Blasio and Cuomo were 2 terrible twins of New York City. I think everybody could agree with that. But look, we have to be optimistic about the future. We have a new mayor, so maybe he'll change things. So I'm optimistic. Hey, Andrew Lee is here from Queens. How are you, Andrew Lee? Paul Little says, Tom, what is your opinion on the Evergrande and its worldwide impact? So I actually don't think that you're going to have this contagion event coming from Evergrande. I really don't think so. I think the Chinese economy is more dependent on America than we are on them. But we actually dedicated an entire stream to this specific topic, I think about a couple weeks ago. But what I think is going to happen, you're going to see a lot of consolidation. So there's going to be a lot of other Chinese development companies that probably buy some of these buildings or these projects for pennies on the dollar. You'll probably see some sort of activity like that going on. T and Me TV says, hi Tom, just tuned in from Nashville, Tennessee. Turned my 27-year-old son onto your channel. Very cool. He loves it. He is also very smart and makes an excellent living as a mechanical engineer for Carrier Corp. That is fantastic. Great company. Thank you, T and Me TV. I appreciate it. Hope you're having a good Friday. I see Al J in the chat. The one and only Ruby Falcone. Love the profile picture, by the way. I believe that is the fearless girl at the New York Stock Exchange. One of my favorite places on earth. Savi says, good night, Tom and everybody. Marjan Worldwide says, I'm optimistic that you made the right decision to move to Florida. DeSantis seems like a reasonable governor. Yeah, I mean, I think the move to Florida wasn't too political, as it was just trying to grow the business. Because if you're a small business owner, especially in tech or consulting or something like that, and you don't have significant venture backing, as in you're getting money from venture capital or private equity, it's a little difficult to expand your business in New York City because you pay too much in taxes. So, if I could save some money on taxes, maybe the money that I save on paying my income tax, it can go towards hiring maybe 2 or 3 employees, in which case that'll help me, offload some work and we could grow the business and then maybe open up a satellite office in New York. You never know. You never know. But everybody, this is actually the Freedom Tower in Miami. Beijing Charlie says, no more Manhattan streams, ? Actually, surprisingly, I'll be in Manhattan next week. So I'm going to be doing a lot of traveling. I'm hosting a client's Christmas party, a holiday party, I should say, in Manhattan next week. So we're going to be back and forth. Ruby Falcone says, thank you, Tom. I'm standing next to the fearless girl. Felt invigorating. Yeah, so I was actually reading an article, Ruby, that they may move the fearless girl again. I'm not sure where, but they may. But good to see you. Savi, good to see you. I see Dutchman says, Tom, hello, Gutsy against from Phoenix, Arizona. You working out of the home, a separate office. Have a great weekend. Yeah, so I sometimes have a small WeWork space in downtown Miami in the Brickell, which is actually my friend's space that he lets me use sometimes. But honestly, things are opening back up, so I'm getting to see more clients face to face. I think that's where I thrive, is, getting in front of people, especially if you're in a sales position. I know a lot of this stuff is moved to Zoom or Microsoft Teams calls, but in my opinion, I really like being in front of people. NJB says, hello, everybody. Hope y'all are having a great day, night, wherever you are. Thank you, NJB. Julio says, hello, Tom. What's up, Julio? Nikki Kennedy says, love your streams, informative with great video skills. Thank you, Nikki. Appreciate it. So everybody, there will be either one extremely long behind the street newsletter this week or 2 specific newsletters. So be on the lookout for that. It should be sent out late tomorrow evening as well as Sunday morning. So be on the lookout. Lost in the Curve says, it seems the Chinese middle class were encouraged to invest in real estate, but it was all a bubble. Yeah, so it was, I think I linked something in the description. So if anybody wants to watch an absolutely fascinating documentary on Chinese ghost cities, I think Sunshine After Rain could drop it in the chat. I forget which Nightbot command it was. But China has been overbuilding like crazy. And China's actually been building entire cities that nobody lives in. So I believe there was a PBS documentary on Chinese ghost cities. If you want to watch it, definitely, I think Sunshine After Rain will probably put it in the link in the description. T and Me TV says, Tom, what are your thoughts on investing in auto part chains right now? So I don't think it really matters what type of business it is, just depending on if it's profitable. So the way I go about investing. Oh, so everybody, this is going to be the brand new Waldorf Astoria Towers in downtown Miami. And this is going to be the tallest building south of the Freedom Tower in Manhattan. So this is going to be the tallest building south of the Freedom Tower in Manhattan. Pretty crazy. It's called the Waldorf Astoria Residences. It's going to be nuts. But yeah, in terms of like auto parts, I guess the way I could answer that question is the criteria that I look for when I'm investing in a business is first of all, I want to evaluate its total addressable market, right? How much of an, I like to call it the lion's share of opportunity is out there? Is it in a small market where it's only maybe $1 billion market, or is it in $1 trillion market, right? So usually I like to invest in the companies that have massive total addressable markets. And from there, I want to make sure I'm looking at their quarterly earnings. I want to make sure they're growing their EPS, or earnings per share, at least 25% plus compounded annualized growth rate, or quarter over quarter. And I want to make sure the revenues are the same, at least 25% plus quarter over quarter. So this is what it's going to look like, everybody. So we just passed all of these buildings, but the Waldorf Astoria is going to look like this. This actually looks like the Jenga Tower in New York City. And this is going to be the tallest building south of the World Trade Center. So you have the FTX Arena, and right here, all these blocks stacked up on top of one another is going to be this building right here. Pretty crazy. Yeah, Tortellini says it looks funny. I'm not sure why they're building so much here. I mean, in San Francisco, has anybody been watching all of the news videos that have been coming out from the local media in San Francisco about how the buildings are actually sinking into the ground? Because I believe there's a certain part of San Francisco that was actually at one time the entire bay, but they actually filled in the bay with dirt. So it's pretty much a landfill, and they've been building these buildings on the water, and they're sinking. They're literally sinking into the ground. I was watching a video today on YouTube where an engineer was looking at all the sidewalks in San Francisco, and they're literally sinking into the ground. They're detaching away from the buildings. It's really quite bizarre, actually. Hey, I see Disney cast member here. What is up, Disney? Good to see you. Happy Friday. Roy is here. He says, hi, Tom. I live in San Francisco. Yes, a lot of buildings were built on landfill, and they're slowly sinking. Yeah, Roy, that to me, see, I never knew that, Roy. To me, that's concerning. And I'm not really a big gung-ho, climate change is going to destroy the world type person. I am very concerned about our environment, and I don't think we should intentionally pollute it, and I think that we should go towards renewable energies. But I mean, from a developer's standpoint, why would you ever build these monstrosity buildings when Miami is sitting below sea level? I don't know. That's just my opinion. What do you guys think? Sarah G says, I love hearing stock talk before bed, dreaming and earning dividends. What's up, Sarah G? Good to see you. Laytha is here, says, hi, Tom. Hello, everybody in the chat. What is up, Laytha? T and Me TV says, thank you, Tom. Great advice. Appreciate it. No problem. Laytha says, Tom, I mentioned that the Salesforce Tower was sinking in San Francisco. It's been sinking since it was built. Yeah, Laytha. So Salesforce, for anybody who doesn't know what we're talking about, is a major software company that specializes in customer relationship management. And it was actually founded by Mark Benioff. And it's a beautiful tower. Salesforce Tower is amazing. It's an iconic staple to the San Francisco skyline, but it's quite literally sinking into the ground. So I'm not sure how that's going to play out over the next 10 years. But I guess we could hope for the best. But I don't know why anybody or any bank would write a loan on a property that's literally being built on landfill. But I digress. Alan Wilson says, good evening, everybody. How are you, Alan? Roy says, Tom, I agree. Apparently the developers are not responsible after 10 years. Just a money grab. Wow. Yeah, that is, wow. That is wild. The Austin Tennis says, do you feel like the CRM space with Salesforce is in is oversaturated? So the Austin Tennis, I think that's a good question, right? I think the CRM space, the customer relationship management space, technically is saturated, but here's what I think. I think that the add-on products and services from an existing CRM platform is pretty much exponential growth. And that's why I think Mark Benioff acquired Slack. So for anybody who doesn't know what Slack is, it's sort of like a Teams collaboration tool. So they compete with a Microsoft Teams, like work collaboration. So when you have a customer relationship management platform or a SaaS, it houses an incredible amount of data. And I used to, I've worked in tech sales my entire life. And so I use Salesforce every day. And I would enter so much data of CEOs, chief financial officers, and the like. Maybe we should go down here. I'm not sure where this NFT thing is everybody was talking about. But from that, once you have a platform that houses all that data, if you can add incremental products and services that add value to that data to help a company grow its revenue, that is exponential. So that is why I think companies like Marketo, which also Salesforce purchased, Tableau Software, which Salesforce purchased, all of these data analytics tools really makes the value and the growth exponential in the data analytics software space. So that's what I would say. So we're passing the Austin Tennis's Rolls Royce here. Paul Little says DC was built on a swamp, a literal swamp. Hey, I see photos from around New York. What is up, photos? Good to see you. Ken says, good evening. Is that your new iPhone? Picture noticeably better. Great job. No, this is the same iPhone. The Swan says they should call it the Leaning Tower of Miami. Hey, Juliana says, hi, Miami is very beautiful. What's up, Juliana? Chuck says, I'm enjoying your video. Thank you. Appreciate it, Chuck. Thank you for being here. Ron says, Tom, when purchasing silver rounds, what do you consider reasonably charged over spot pay? So yeah, Ron, so I'm actually, and I don't know if I think I've mentioned this on the stream. I think for a very long term hedge to the big debt bubble we have, I think everybody wants to talk about the stock market is in a bubble, real estate is in a bubble, which that is true. That is 100% true. But the biggest bubble, the biggest monster bubble the world has ever seen is the debt bubble. Because we live in a debt-based society now. Ever since the United States went off the gold standard, the Federal Reserve is free to print as much money as they want. So the United States has ran up its debt exponentially, and we know we'll never be able to pay it back. So this is all Keynesian economics, right? So the only way to sustain a debt-based society is to acquire more debt in perpetuity. And we actually heard from the International Monetary Fund today that came out and said exactly what I said. They're like, the only way we can stop a major financial collapse is to continue to issue more debt, which is a little wild. Oh, so this is, I think, the Metro movie here in downtown Miami. So what I'm thinking about doing is over time, maybe once a month, allocating a portion of my income to stack physical silver. And I'm not buying physical silver to try to do it for a short-term trade to make money off of, but maybe just as a store of value over 60 years, right? Because as we know, we talk about a lot, there's a lot of manipulation in the precious metals market via the derivatives market, or as they call it on Wall Street, the paper. Yeah, so the train goes all throughout the city. It's crazy. I know Photos from Around New York has got to take the camera up there. We'll do it during the day. I don't really want to do it at night, but we'll definitely do it during the day. The British Grey says, Tom, I was told that the reason why those buildings are sinking into the ground is to San Francisco because of the earthquakes they are experiencing. Probably very interesting. Tortellini says, anyone ever find silver dimes or quarters in their change? So I actually don't carry any cash. I've never carried cash or any physical coins pretty much ever. Jonathan says, Tom, I like when you're walking around as well as skating. Appreciate it. We should have the board back very soon, everybody. We're gonna have the board down here. 48 says, hey Tom, how are you tonight? What's up, 48? 48 is joining us from New Zealand. Beautiful country in New Zealand. Jordan LeBeau says, hey Tom, how's it going? What's up, Jordan? Hope you're well. Okay, Scott says, go left 3 streets. So should I continue walking this way and then go over? Oh, Scott, so you said I was on it. We'll see. Photos from around New York says, I have found 2 Mercury dimes in my lifetime. They're both worth about $5 each. Roy says the towers in San Francisco are also sinking because of the earthquakes. So not to get too off topic tonight, everybody, because we were talking about the big sell-off on Wall Street today. Big sell-off in growth stocks. Big sell-off in very high beta growth stocks. But I would like to make a comment on climate change. Everybody talks about how you shouldn't buy a house or you shouldn't buy a property in San Francisco. You can't buy a house or property in Southern Florida, and that you can't buy anything in some parts of Texas. Well, in my opinion, and let me know what you guys think. In my opinion, if there's ever a time where San Francisco is totally submerged in water, what makes you think New York City is not also going to be submerged in water? Okay, it's not like the sea level rise only affects one little tiny piece of America. No, if the sea level actually rises to the levels that they expect, it's not just going to be San Francisco and Miami that's underwater. It's going to be every coastal city in America. You know, you're going to have Boston underwater and New York. And a lot of people that aren't New Yorkers, they don't realize during Hurricane Sandy, quite literally, Lower Manhattan was totally underwater. I mean, I was here for that. It was scary. It was crazy. Yeah, Bob says Manhattan is at sea level as well. You're right. You're right. It is. I think Hoboken, New Jersey is one area where it's probably the most flood risk, is Hoboken, New Jersey. And I also think parts of Paramus, New Jersey, too. Roy says, hey, Dutch. What's up, Dutch? Arch that cop car. You walk into the right, says Shot by Scott. Marjan says, I live on Eastern Long Island, and I can tell you it's a big concern here as well. Yeah, Marjan, I agree, because, well, this is Northeast 1st Street. So I think we got to go up one more, I think. So here's what I'll say. I'm also from Long Island. I'm from South Shore, Long Island. And Long Beach, you think about Oceanside, Island Park. Anytime there's a big rainstorm, all of those places flood like crazy. Okay, got it. So Scott says make a right up ahead at the cop car. I think there's a big dead spot over here, everybody. So the stream may go out, but we're going to try it anyway. Roz999 says, during Hurricane Sandy, Citigroup's 111 Wall Street building was flooded to the 2nd floor. A lot of infrastructure was ruined, and it took months to use the building again. Yeah, it was crazy. It was crazy. Long Beach, New York was totally decimated. It was horrible. This is Hoboken, Weehawken, New Jersey. Jersey City will all be underwater. All of Long Island, Rhode Island, Cape Cod. Yeah, so Laytha, that's the point. So in my opinion, everybody's like, don't do anything because it's all going to be underwater. Well, the places that are the most fun and the most enjoyable, everybody's saying is going to be underwater. So I don't care. I mean, if I buy a place, I want to buy a place in Manhattan, and I want to have a place in Miami. When I'm 80 years old, if they're both underwater, there's nothing I could do about it. Well, Scott, you're right. It does kind of look cool. I guess we'll take a walk around. We'll see. It looks like everything's closing down, but we'll check it out. Hey, Lucas says, hey, Tom. I am very ill in this moment. God bless all the ill people. Well, Lucas, please get better, man. Please. Wow, Scott, we've never been down here on the stream. This says Lost Boy. Christian says just buy a boathouse. Hilarious. Lost in the Curve says thought you were moving to North Dakota, or was it South Dakota? Maybe. It's in the cards. It's definitely in the cards. Tortellini says Manhattan will be the new venue. I think there is some real use case in NFTs to be able to have verifiable digital proof that you own virtual assets. I think that is extremely valuable and useful. But at this point in time, usually whenever you have a new emerging technology, usually you have massive boom and bust cycles. So if we think about back to the tech and telecom boom in the year 2000, the same thing happened, right? Every single company with .com in its name was going public, and everybody thought it was going to be the next big thing and it was going to go to the moon. And then what you had is you had an over 80% correction in the NASDAQ. And the majority of the stocks within the NASDAQ actually went out of business and are no longer around. I think the same thing is probably going to happen with a lot of these NFTs that are trading for, 50 million, sometimes $100 million. I think the majority of them will go to zero, and then it'll run through its cycle again. And then you'll probably have a more stable, more reliable market where people, especially business owners or artists or really whatever, a sort of digital asset you want to have commerce with, will be able to, trade them and have verifiable proof that you own them on the blockchain. So Scott says if you look up, you'll see the projections on the rooftops as well. Oh, you can. That is cool. Wow. And I believe at the bottom left, it'll show you the artist. Very cool. Gene Paul says Miami's oldest buildings are around Flagler Street. What's up, Gene Paul? Good to see you. Robert says buy established NFTs and get in good with the creators/artists. That is the key to their utility, says Robert Stevens II. Interesting take. Yeah, the only thing I would say, I think what Robert's saying is good advice, but the only thing I would say is that I've seen this many times. I've been doing this a long time, and I've seen manias, I've seen bubbles, and time again, everybody says the same thing. It's always different this time. It's always different. It's never different. It's never different. I think I think what's going to happen is the vast majority of this stuff is going to go to literal zero. And a lot of people are going to get wiped out. But that's normal. That isn't any cause for concern at all. That's actually a normal market cycle. Whenever you have some sort of new technology, a lot of people get excited about it. They experiment with it. And then it gets to an irrational exuberance phase. And then you have extreme fallout. And then from that, you have a washout in the market of people who aren't really in it for the right reasons. You have a total washout of people that are just in it to try to make a quick buck and for speculation. And that's when you have real people that build upon it and actually build infrastructure. So I think it's pretty normal. Flexstream says my stocks have been on a roller coaster ride this week, but I ended down. I think I'll need to live on mac and cheese for the next month, says Flexstream. Yeah, so Flexstream, that was the topic of the stream tonight, right? Is that if you're the average guy or girl out there and you're looking at this stock market, you're like, well, the S&P 500 is only about 4.5% off its all-time record highs. You could see that the NASDAQ is about 7% off of its all-time record high. So there's not much carnage in the major equity indices, but where there is carnage is in these extremely high beta growth stocks. And these are the companies in which case, by and large, I trade. And that's why you have to have very good risk management. But one of the reasons that we're seeing this is I believe a lot of fund managers and Wall Street in general, analysts on Wall Street, are starting to re-rate these names. There's going through a re-ration. If you look at the multiples of the price to sales, price to earnings of a lot of these SaaS stocks or software as a service stocks, the high growth names, the valuations were getting quite extended, and the Federal Reserve is constantly saying we are going to raise interest rates, we're going to start to taper by dialing back our asset purchases of bonds and mortgage-backed securities. So what I think we're having is what's called a taper tantrum, and we've seen this before. We've seen this before right around 2015, I believe. And so when you look under the hood in this market, I believe something like 60% of all the stocks in the NASDAQ are below their 50-day moving averages. And I think this is important to pay attention to, because if we look at the similar situation that happened in 1987, that caused the major stock market crash of 1987, you had indices at all-time record highs, but you had, it's called the breadth of the market. The overall breadth was extremely poor. So the fundamentals in the market, so the majority of the stocks in the market are continuously at or near 52-week lows, which is not good. So this is what I think is going to happen. I don't think that we are going to see a 1987 style crash, style moment. I don't. I could be wrong, but that's my opinion. I don't think that. What I think is going to happen is we are going to start to see a lot of capitulation in these growth names. And I think one of the signs for that, or capitulation in a lot of these high growth tech stocks, is you'll see extreme pickup in volume and price not continue to decline. And that means a lot of shares are being absorbed by the market. And then you'll probably have these growth stocks go nowhere for maybe 3 to 6 weeks, or maybe 3 to 6 months, and develop new bases, have a couple more earnings seasons roll through. And if earnings are strong, then that's when big institutional players will then reaccumulate these stocks, and they should move higher. That is sort of my thesis that I'm sticking to. That's sort of the notion that I've stuck to for quite some time now. I could be wrong, but that's what I think is going to happen. So it's important in these times to pay extra attention to the market. The vast majority of people, when stocks are getting crushed, that's when they sort of turn off and don't pay much attention. But this is the time to pay attention, to make your new buy lists, and buy once stocks with good fundamentals, with good earnings and good sales growth are starting to reemerge from bases again. But we'll go into that more on the newsletter. Ticker Time says, do you have your own jet you get from New York to Miami quickly after a week? No, I just fly regular, what do you call it? JetBlue or Delta. So this is pretty cool. We should probably come here during the day. So this is Miami Art Week in the Flagler District. So if anybody wants to scan the QR codes, you can see it. Hey, what's up, EBITDA? This is what's up, Tom. Happy Friday. Happy Friday right back at you, EBITDA. We're in downtown Miami looking at some of the NFT stuff. I think that the party is pretty much over for tonight. It's almost midnight already. It's crazy. Hey, Cool Answers. I do an annual reevaluation of all my holdings in December. I look forward to your next newsletter. Appreciate that. So I think we're going to have 2 of them coming out this weekend. So have a lot to talk about, a lot. Sally says, beautiful view, Tom. Good to see you, Cool Aunt 516. Christian. What's up, Christian? How are you? Mario Howell says, good evening. What's up, Mario? EBITDA, hope you have a good weekend, EBITDA. I think you were telling us that you had a crazy week this week, so hopefully you got some time to take it easy. Christian says, I was 9 in 1987. Don't think I knew what a stock was back then. Yeah, I was born in 95, so. Hey, Hunter Butler says, hey, Tom, good to see you. Good to see you, Hunter Butler. Melanie Sam says, what's up, Tom? What's up, Melanie Sam? What's up, Hunter? What's up, The Swan? Good to see you. Ice is here. What's up, Ice? A what? A what is it called?
Like stock, like you do stocks also, right?
What is that?
Like regarding the same thing, right? Well, that's just for the art.
I don't know what this. I think this is like an NFT week thing going on here. I'm not sure what it is, but
the NFT is part of the stocking. That's what I was asking. I thought you were like a vlogger for stocks. That's what I was asking. First and second.
Oh no, we do like a live show where we talk about like financial markets. We mainly do lives in like New York City, but I just moved down here, so yeah, we do a live stream. It's called Wall Street Escape Row on YouTube. Yeah. It's on YouTube. So if you type, so if you type in Wall Street Escape Row, it'll be like we do a live show almost every day. But what is it called again? That you said? Oh yeah. Oh yeah. So yeah, it's called Wall Street Escape Row. ERO. Yeah, so we talk about like finance, the equities markets, but we're mainly in New York City. I'm from New York, but I just moved down here to North Miami Beach. A couple. Oh, really? Yeah, I'm on 168. 168th Street. Oh, really? Dude, sick. Yeah, I just closed on the house 2 months ago, so I'll be around.
Congratulations.
Yeah, thanks, bro. Yeah, I'll see you around. Thanks, man. See ya. That was a nice guy. Roz is a little behind the scenes action, says Roz999. Roberts is stocks. Ticker Time says you're 26. You come off as very intelligent for that age. I appreciate that. I think there's a lot of 26-year-olds that are a lot smarter than me. But everybody, hopefully tomorrow we'll be able to be in Wynwood. I've never been there actually before. So hopefully we'll be able to walk around, check everything out. We'll see. Lucas says, Tom, it's good to see you one more time again. Lucas, right back at you. Good to see you as well. Sarah G says, any tips on networking since you're in sales, Tom? In my opinion, I think the best thing you could do, especially if you're in a major city like New York, would be to go to charity events. So if you go to charity events, it's a great place for networking. Number one, you're around a lot of like-minded people that are doing a lot of good things, right? I think it's by and large a very good thing to go to charity events to help people and help different causes, but there's usually a lot of high net worth individuals at these particular places. But I think the easiest way to network if you're in sales or you're in software sales, or even if you're in a sales role at an investment bank, is really just to network within your organization. You know, maybe you try to get some FaceTime with your managing director, or you get some FaceTime with your VP, something like that. I think that's probably the easiest way to network, because the way I think about networking is sort of the way I think about Metcalfe's law, is that once you make a connection with one person, that person probably knows about 3 or 4 people that's probably good for you to know as well. And then it just grows exponential from that point. But yeah, I would say charity events is very good. If you have a hobby outside of work, maybe there's something you really like to do. Maybe you like golfing. You know, maybe network with some people at the country club, something like that. That's what I would do. Joel Case's country club. There we go. Absolutely. Hey, Bob, says this section of downtown gives off Manhattan vibes. Maybe a little bit. I think the Brickell has the majority of the Manhattan vibes. But I think you're right. Bob says this section of downtown gives Manhattan vibes. Hey, Yogi Bear fan is here. What's up, Yogi? Laytha says if you want high net worth individuals, you need to get a plane packed with executive airport like Westchester. That is where you meet people with cash to burn. Yeah, I think you're right on that. Also, what I would add is if you get like a 7 a.m. flight from Miami to New York City on a Monday, those are all business executives. EBITDA is Manhattan vibes, aka scaffolding. So EBITDA, I think you said what's going on down here for the Art Basel. I've honestly never been here, so I can't really advise, but I think this year is very heavily weighted towards the NFTs, from what I've been hearing. So a lot of artists are putting up their artwork or their non-fungible tokens. See, I just passed the pizza shop here. I'm not gonna show it on camera, but I don't think I could ever bring myself to eat Miami pizza. In my opinion, I don't know. We'll see. Shop by Scott says during the day it's like Queens, tons of storefronts of all kinds of quirky shops, shoes, luggage, etc. Yeah, so Scott, I think you're right. Every time I'm down here in the middle of the day, because sometimes I work at a little WeWork style office down here. It's almost like Midtown Manhattan. There's tons of people out and about all the time here. But at night, it's definitely way more dead than New York City. And I think one of the reasons for that is because the majority of people here in Miami, they drive cars. Right, in New York City, almost nobody drives. EBITDA says best part of going to Yale besides networking is the pizza in New Haven, Connecticut, says EBITDA. Very cool. EBITDA, is that where you went? You went to Yale, right? Joel K says New York pizza, Chicago pizza, both very good though. Sarah G says I definitely enjoy networking and expanding my connections. I agree with that. CCG says art in the convention center in Miami Beach. DN says I always live within my means, totally debt free. Nice feeling. That is a nice feeling. It's a great feeling. Hey, Robert says I bought calls a couple times and did great. I've tried to use more complex strats that limited my risk and got crushed. Feel better when you just YOLO on your convictions instead of limping in. Yeah, so Robert, I think one of the main reasons about, and I always get these questions about options trading, right? About derivatives trading. So in this market, and a lot of people don't realize, it's very difficult to make money in the options market right now. Because let's say you're buying a call contract on Facebook, let's say, now called Meta. And even if Facebook moves in the direction that you want, in this environment, you're probably still not going to make money because you really have to understand the way options are priced, right? There's a lot of things, there's a lot of variables that go into the pricing of a derivative product, right? So a call contract, you have your delta, you have your theta, your vega, your rho, your gamma. And one of the most important things to take into consideration when buying options, right, when purchasing, not selling, is volatility. And, look what happened today. The VIX absolutely blew up again today. The VIX is sitting in its 30s. I mean, you want to be buying options when the VIX is at 35? I mean, that's crazy. I mean, even if you bought puts on the S&P 500, I mean, what was your risk reward there? When volatility was in its high teens, 20s and 30s. So a lot of people, they'll be like, hey, I bought calls on Nvidia and the stock moved higher, but I still didn't make any money. Because a lot of the times what happens is when you have an explosion in volatility, a lot of novice option traders start buying call contracts, or they start buying puts. And when stocks start to recover and move higher, the VIX collapses. So the VIX can go to 30 to 15, and that's going to steal all the premium out of your option, 100%. And that's called something volatility crush, right? So even though the stock moves in the right direction, it doesn't necessarily mean you're going to make money, because you have to understand volatility. You have to understand how options are priced. So I think that's why a lot of these Robinhood and Webull options traders tend to get wrecked, because they don't understand how these derivative products are priced. They don't understand volatility. They don't understand time decay, right? They don't understand theta. So, yeah, EBITDA's volatility is always priced in, by the way. Yeah, and I mean, you know, one of the things you have to take into consideration is, of course, it's priced in. You know, the market makers are not going to let you have a free lunch. Market makers are there to make money, right? The market makers are there to make money off of you. Joel Case's options are tough. Yeah, I mean, I think there are very successful options traders out there, 100%. But I think as a retail trader, you're probably better off just staying away from it altogether. If you don't have experience in it, it's just like you're wasting your money in my view. Hey, meets Mr. Howard's is IV Crush. Yeah, Volatility Crush. So think about an environment like we have right now. I think the VIX closed up 15% to what, 33? I think the VIX is like what, 33 to 35 right now? And the S&P and the NASDAQ are only about 3 to 5% off all-time record highs. But you have all of these growth stocks getting crushed. So it's either one or two things are going to happen. It's either you're going to have a 1987 style stock market crash, which I don't think is going to happen, or this market is going to turn right around and hit new all-time record highs. And this is EBITDA's yacht we're looking at. Hey, Chris says hello again, Tom. Hope you're doing well. What's up, Chris? Roz999 says thanks for another informative and entertaining stream. Have a good one. Thank you for joining, Roz. Appreciate it. Japan, what is up, everybody from Japan? Hope you're well. If you look straight up, you'll see the Aston Martin Tower. This is the big What's up, photos from around New York? Hope you're well. Roberts' 20+ year treasury bill 3x shares ETF is my favorite thing to just hold a little in case of days like today. Easier than trying to time the VIX, is Robin Stevens II. Very cool, very interesting. Does anybody have the time? Cool Aunt says only place in Florida that I have found is St. Augustine. EBITDA says people who trade derivatives without true understanding is the equivalent of gambling. I have been having some success with bull call spreads on the S&P before the correction. I agree with that, EBITDA. So guys, I think we're gonna have to cut the stream short tonight because it's already 11:30 and I gotta make the last bus home. But this is a pretty cool yacht. The one we saw yesterday, everybody, was insane. It was a yacht by a Swiss billionaire and the thing was absolutely incredible. But EBITDA's yacht is pretty cool too. So we're gonna have to cut this stream short and we're gonna have to get the bus, but I promise we will be back tomorrow. I had to start the stream a little late because I was so busy today on a bunch of conference calls with clients and the like. EBITDA. So everybody, as we walk back to the bus, if you want to sign up for my newsletter, it's completely free. If you type !NEWS in the chat, you'll be able to see it. Just punch in your email and you'll have the newsletter emailed to you. I should have a lot of content coming out this week. There's a lot to talk about. A lot to cover in these markets. So I appreciate everybody joining tonight. I hope everybody has a great weekend. Try to get some rest. And I will see everybody right back here tomorrow. Hopefully in Wynwood, we will be checking out some of the artwork there in Wynwood for Miami Art Week. Sally, thank you for joining. Revis, Marty Lewis, appreciate you. Hey, Carol H, appreciate it. Ibita, thank you for joining. Carol H, thank you for joining, Carol. I appreciate it. Hope you're well. Have a good weekend. Jim says good night, everybody, and have a safe and wonderful weekend. Thank you, Jim. Laytha, sunshine after rain, everybody. Appreciate it. 48, have a wonderful weekend. Hope you have some good plans for the weekend. Hey, Anonymous Dude says happy Friday. Woodstock says, hey, what's up, Woodstock? So I guess I'll end the stream at the bus stop. So I'll take you guys with me. Hey, Zachary's here, says hit up sushi in the Versace mansion. So if you look to the right, this is the Aston Martin residences. Pretty crazy. So here in Southern Florida, you have the Aston Martin Tower. You also have the Porsche Tower, Porsche Design Tower in Sunny Isles Beach, Florida. And then right next to the Porsche Tower in Sunny Isles Beach, you're gonna have the brand new Bentley building. Hey, Jim says, great, Tom, as usual, very informative, appreciate it. Thank you, Jim. Marshawn says you need a car. No way, no way. EBITDA says, Tom, how much for a condo in the Aston Martin Tower? I'm not sure, probably a couple $1 million. I'm gonna guesstimate the starting price is probably $2 million. I'm gonna guesstimate probably $2 million, maybe starting. Yeah, but I refuse to drive here. I refuse. I like this guy's dog, beautiful. I think this is one of those BMW i8s. Those are pretty cool. All right, guys, here's my bus. So I'll talk to you all tomorrow. Have a good Saturday. Try to relax. EBITDA says i8s lose value faster than any other car. Is that true? I didn't know that. Wow. BMW i8. So just a quick story about those scooters that these guys are doing a brake check on. I was walking home from work one day in Manhattan, and these guys were doing the same exact thing as they were doing. With the scooters, they would go fast and they'd do the brake check. so they could make the obnoxious noise. And these two guys did that, fell off the bike, and gets run over by a car. It was the most horrifying thing I've ever seen. He was okay, but he got run over by the car. So don't do that stuff. So if you ever rent a scooter or moped, don't brake check it because you may get run over by a car. Yep, and this was, I think this was 2018, I believe. And this happened on Water Street. Yeah, Ibita, I saw it happen and he did survive. And he was ripping around, and I saw him, he was doing laps up and down Water Street. I believe this was Water Street in Lower Manhattan. And he was doing the brake check stupid thing. I guess the wheel gets caught or the brake gets caught or something, and he falls into the other lane. Over by a car. It was one of the most horrifying things I've ever experienced. So, but we have more crazy stories like that, but we'll save them for another day. Everybody, thank you so much again for joining. I appreciate it. Have a great weekend. Ibita, thank you. Marjan, Bob, I appreciate it. Roy, thank you. Ibita, Paul Little, Robert Stevens II, Shot by Scott, thank you for showing us around. Yogi Bear Fan, Tortellini, Marcat, thank you. Roy, Sunshine After Rain, M Wall on the Run, Anonymous Dude, Photos from Around New York. And to the Mighty Bull, have a good night wherever you are, because as always, there's always a bull market somewhere. Even though growth stocks are getting hammered, you just need to know where to look, and I'll see you guys right back here tomorrow.